It's the last business day of the week. Welcome to Business Incorporated live from Lagos, Nigeria. I'm Chimize Obi Iwago. Coming up on the show, Kenya begins sale of a mobile phone-based government bond, looking to draw more investors into the government securities market. And Tunisia, hopeful the International Monetary Fund will release the $350 million second tranche of its loan next month. Plus, Germany Africa Business Forum ends in Berlin, with delegates asking German companies to vary their investments more and spread them more widely within the African continent. We start off with the markets, and here in Africa, the markets here in Nigeria and of course South Africa were in the red at intraday, down 0.15% and 0.44% each. However, Egypt, which is closed today for the weekend, climbed 1.19% on Thursday, with trading volume nearly doubling from the previous session as foreign funds were net buyers of equities. Nairobi also closed high on Thursday by 1.18%. And most stock markets in the Middle East made small gains on Thursday, recovering some of the week's losses, but trading volumes remained very low. The Saudi stock index climbed 0.68% as the petrochemical sector regained some of the previous session's heavy losses after Brent oil bounced from a 4-month low hit on Wednesday. However, a 1.1% decline in shares of heavyweight Emaar Properties dragged on Dubai's index, which fell 0.38%. Abu Dhabi's index added 0.3%. But saw its lowest daily volume since mid-December. In Qatar, the index advanced 0.47%, with 70% of trader shares gaining. And in Europe, investors are uncertain over a delayed vote on U.S. President Donald Trump's healthcare bill. Trump warned House Republican lawmakers on Thursday that he's prepared to leave Obamacare unchanged and move on to tax reform if they do not vote in favor for new health care legislation on Friday. Well, we're hoping to join the Frankfurt Stock Exchange as soon as we get through to them. But let's quickly take a look at Wall Street. The U.S. stock index futures pointed to a slightly higher open on Friday morning as traders await a vote for the Republican-led health care bill. President Donald Trump warned the Republican members of the House that he will leave Obamacare unchanged if they do not approve the bill. On the data front, Friday will see the release of the latest durable goods orders at 8:30 a.m. Eastern Time and the latest manufacturing PMI at 9:45 a.m. Eastern Time. In Asia, markets closed mixed on Friday as key healthcare vote in the U.S. was delayed and President Donald Trump called on legislators for an up or down decision on Friday. The Australian ASX 200 finished up 0.8%. Japan's Nikkei 225 closed higher by 0.93%. The Kospi slipped 0.17%. Mainland China markets were in positive territory. The Shanghai Composite ended up 0.63% and the Shenzhen Composite closed up 0.4%. Hong Kong's Hang Seng Index was flat by mid-afternoon as traders looked to the Hong Kong chief executive election on March 26. This will be the first election since the pro-democracy umbrella revolution protests in 2014. Well, back here in Nigeria, Cadbury Nigeria PLC and Unilever Nigeria are two companies in the consumer goods sector that have just released their 2016 financial earnings. While Unilever reported an impressive result, Cadbury posted a loss in its 2016 financial year. What has driven these earnings of these two companies? Let's bring in an equity analyst at Exotics Partners, Olabisi Ayodeji. Good afternoon, Olabisi. Thank you very much for joining us.
Hi, Chimi. Thanks for having me.
Right, looking at Unilever and Cadbury's results, were they in line with expectations or you were surprised?
Well, broadly, we expected to see some pressures from input costs, considering that these two businesses have quite significant gearing to the dollar. However, Unilever slightly surprised because it recorded some exceptional gains. Cadbury, on the other hand, came broadly as we'd anticipated.
Now, how was Unilever able to perform so well in the challenging environment, and what weighed down Cadbury's performance?
So first, the two businesses actually implemented price increases towards the end of the year. This was supposed to attempt to offset input costs that had risen on the back of the weaker naira. However, given Cadbury's relatively smaller scale, it was unable to offset some of its fixed costs. Unilever was better able to do so. Also because if you've looked at the results closely, you'd see that admin expenses actually went down in the year, meaning that they were able to attain some operating efficiencies. In addition to this, Unilever also recorded some exceptional gains. So towards the end of the year, it received a loan from its parent company. It also accumulated a bit of cash in naira because it was unable to source for FX to settle its FX liabilities. And so it got some interest income on that balance, and that's part of what contributed to earnings growth, in addition to the fact that Unilever also recorded some exceptional FX gains from its foreign currency receivables from related parties. So essentially, this is what helped support Unilever's results. Also, it's worth putting in mind that Unilever is actually recovering from a low base. So between 2012 and 2015, its earnings has actually declined year on year continuously, and so this is really just a recovery from a weak base for Unilever. Cadbury, on the other hand, it came in broadly as expected, considering that it was unable to pass off a lot of its higher input costs to customers.
Now, how do you think the competitive landscape has changed, and how has this helped these companies?